Brad Lamensdorf. One stock you're short in your Ranger Bear Equity ETF is Zillow. Now it trades at 18 times sales, so it's clearly expensive, but a lot of those shares are sold short. You're not worried about a squeeze?
We are short, and we are worried about squeezes somewhat. It's a 1.5% position, and so it's a smaller position than in one of our bigger, larger core names. We think that they've had a lot of easy, low-hanging fruit that they've been able to capture, and the amount of effort that's going to go forward to keep their growth rate going is going to basically double their CapEx in marketing, and we think that the margins will start getting hit, and insiders are selling more stock than they have in sales.
All right, you're also short Lululemon. This stock continually gets bad headlines, negative headlines all the time. Is that why you short the stock?
Actually, no. This grades.
You don't mind the bad headlines?
We love the bad
Okay.
headlines. But look, Under Armour is doing a fantastic job of cannibalizing their business. They've obviously had some management problems. But when you get a stock that moves up to 4, 5, 6 times sales, when they do start coming out with those bad headlines, the arbitrage between where a momentum player will own that stock and where a GARP player will own it is quite an arbitrage. And that's what you're seeing in the stock price right now, is a move down to where finally a GARP type player would own the stock. And there's just a large area between the two.
All right, finally, FactSet Research, another controversial name. You're short it. Tell me why.
We are short. Bloomberg has recently come out with a new back tester that they're giving away for free on their Bloomberg. That is one of FactSet's major areas where they make a lot of money, and we feel there's going to be a large migration away from a $70,000 a product to a Bloomberg where they're giving it away for free.
All right, and then finally, we're seeing a lot of cloud IPOs come out over the last week. The valuations are insane, reminders of the tech bubble of 2000, 1999. Are you just licking your lips waiting for these things to move up a little bit more and start shorting them?
This is actually one of the most enriched areas of the market that we've seen to short since 2000. There's so many IPOs and companies that do fit that criterion. And
now, when do you start attacking them? When can you start borrowing the shares and start attacking? Because they're very thin floats.
That's right, and so we would wait for the lockups to start. That stuff won't start for 6 to 9 months, so we really won't look at a stock till it has more of a trading history.
And then the Ranger Equity Bear pounces.
That's right.
Thanks a lot, Brad.
Anytime.
Thank you for watching The Street.